Hi everyone, I'm Rosemary Miller, and we have a lot in store for you today. Another exchange is making headlines for all the wrong reasons. On to our markets. The Fed recently hiked rates by 75 basis points, which was mostly expected. Federal Reserve Chairman Jerome Powell says he does not think the U.S. is in a recession, and another unusually large rate hike could be appropriate at the next meeting. The crypto markets seem to have reacted positively immediately after, as Bitcoin is around 22,000, up 6% over the last day, and Ethereum is around 1,500, up a little over 13% over the last day. As for our leaders in Laggards, we can see Ethereum Classic is leading the day, seeing over 20% gains, and even our Laggards are up for the day. The New York Times reports that Kraken is under federal investigation for potentially violating sanctions on Iran, Syria, and Cuba. The Treasury Office has been investigating Kraken since 2019 and is expected to fine the exchange for allegedly allowing more than 1,500 Iranian users access to the platform. Kraken would be the largest U.S. crypto company to be hit with an enforcement action by the Treasury Department. Using crypto to evade sanctions has been a hot topic this year after Russia invaded Ukraine, leading to widespread financial restrictions on the country. In March, Russian oligarchs and billionaires hit by severe sanctions turned to Bitcoin to move their assets. Last year, the Treasury Department warned cryptocurrencies potentially reduce the efficacy of American sanctions. Earlier this year, Kraken CEO Jesse Powell refused to freeze Russian users' accounts. Powell tweeted, "Our mission at Kraken is to bridge individual humans out of the legacy financial system and to bring them into the world of crypto where arbitrary lines on maps no longer matter, where they don't have to worry about being caught in broad, indiscriminate wealth confiscation." The European Banking Authority is struggling to hire staff specializing in crypto. The regulator's chairman called it a major concern ahead of Europe's new crypto regulations known as Markets in Crypto Assets Regulation, which is coming in 2025. Jose Manuel Campa, who is the regulator chairman, warns the very dynamic nature of crypto markets puts regulation behind the curve and predicts that in 3 years, the technology could have moved and transformed into other uses that I cannot anticipate. Coinbase shares have taken a pretty big hit following disappointing results and a report that the company is being investigated by the SEC. 3 funds of Cathie Wood's ARK Investment Management sold a total of more than 1.4 million shares of Coinbase Global on Tuesday. In May, ARK bought more than 500,000 shares. On Tuesday, Coinbase shares closed at $52.93, down 21%. Based on Tuesday's closing price, the value of the offload shares would be over $75 million. Coinbase shares have fallen from a high of over $400 on its first day of trading in 2021 to as low as $40.30. EY, one of the Big Four accounting firms, has built an Ethereum-based system to help institutions manage their carbon footprints and satisfy environmental, social, and governance mandates. The carbon tracking prototype builds on the firm's existing supply chain traceability product suite and is known internally as OpsChain ESG. So you guys, we have fellow Forbes crypto reporter Maria joining us again, but this time to discuss something called NFT Domains. So Unstoppable Domains closed a Series A round of $65 million this morning, which is an NFT domain company. But what are NFT domains?
Thank you for having me again, Rosemary. So NFT domains are decentralized domains that live on blockchain technology. They're essentially the blockchain and Web3 answer to website domains. The goal with what a lot of these companies are doing is to, create a centralized or create a place for your decentralized identity. So now that you've bought into the world of Web3 and crypto and you have your wallet with all your crypto and your NFTs, how is that protected? What is the infrastructure that will keep that inside the blockchain?
Maria, wait a second. Let's back up a little bit.
Yes.
Can you break this down to me like I was born in 1930?
I know. Exactly. So the way that blockchain works right now, or crypto, is you have your wallet with a very lengthy address. There's probably a lot of numbers and zeros and different combination addresses. That's your identity for now. That's where you hold your money. That's how you know you're a user. That's where the wallet, where you keep all of your NFTs. So now what all these companies are trying to do is, let's say I have my wallet. They're trying to separate the financial aspects from the identity aspects. So instead of when I make these transactions or you make these transactions and say, here's my wallet, everything that is in my wallet is now viewable to you. You know, we have companies like Etherscan where you can see these transactions, and that's part of the transparency of blockchain. Instead of being able to see that address that connects to both my financial identity and my financial kind of assets and my like identity as a user, what these companies are trying to do is separate the both. So instead of giving my entire wallet, they're only giving you your ID.
Okay. So are you guys picking up what she's putting down? What she's essentially saying is, we have a wallet here. And we're not using our whole wallet. When you go to the store, we're not giving our whole wallet.
Exactly.
Yeah. Okay, so we're giving one. All right.
Exactly. And so again, they're just a way for you to kind of separate that, your finances from your identity, in the blockchain. And so, you know, as more people and more users start buying into these crypto companies, into these NFTs, into metaverses, your identity is something that is very powerful. You know, I always like to say the whole ethos of Web3 is the idea of decentralization and ownership shifted back to the owner. This is just another way that you're kind of facilitating this. So Unstoppable Domains specifically is trying to build the infrastructure for this.
Is that what you say, that that's why someone should be interested in this, because they're owning it?
Exactly. Well, I think that's kind of the ethos behind all of it, all of
Okay.
Web3. But specifically for NFT domains, you're just essentially shortening your wallet address and then giving yourself the ability to, in the future, depending on how like the technology and the infrastructure develops, separate it out. So for example, if I want to buy maria.nft, which is a very expensive domain right now, but that instead of like, depending on the partnerships and what companies they partner with, I will able to use my maria.nft as almost my login or my username instead of my lengthy ABC123 wallet address. And they're all at the same time connected to me, my identity, my wallet, that's where I can hold everything, but you're just separating it out. So then you can choose what you want to show to what application.
Okay. Well, you guys, so now we know a little bit about NFT domains. We're going to see if that's actually the future. Do you think it's the future?
We'll see.
We'll see.
We'll see.
All right. Well, thank you so much for joining us today, Maria.
Thank you so much.
All right. Thank you all so much for tuning in, and don't forget to follow us on Twitter at Forbes Crypto, and feel free to send me any tips at Rosemarie TV. Peace.